How's it going, traders? It's the Pup of Wall Street back with another weekend review. Today we're going to look at my top tech and sector charts going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel down below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. If you have any questions, please leave a comment down below. Let me know what you think about this video. And lastly, keep in mind, this is not financial advice. Doing this for educational purposes only. So let's dig into these charts. As always, using Trend Spider to do my charting, and we will be looking at the weekly time frame. I put out these videos every single week. I generally go over the same names. The tech charts are always the same. I always go over the top sectors, and then I look to see where there might be some potential relative strength. And of course, this week, not seeing too much relative strength coming in, but let's take a look first at what we have. So we are looking at the Dow Jones Industrial Average, ticker DIA. And you can see we have a falling, broadening formation here. And we had an inverted hammer into the 200 SMA and the 382 Fibonacci retracement coming in at 297.52. What I'm looking for, downside targets, 283 and then 275, potentially 267 and then 253 next. If we hit 253, that would be the 618 retracement from our COVID low to our all-time high. You could see no squeezes. RSI is looking pretty weak, but not quite oversold. MACD has crossed under. Next up, let's take a look at the SPY. Very similar broadening formation. You can see the top side resistance, bottom channel. We had a little oopsie here, but we're holding right on top of that 200 SMA and the 2018 anchored VWAP swing low. Also have that 50% Fibonacci retracement at 349.17 right below. So if we do fail at that 200, I would expect 350 to come, 349 being that 50%, as I just mentioned. And below 350, 318.29, that's going to be your 618 Fibonacci retracement from your COVID low to the all-time high. Again, no squeezes, RSI weak but not oversold, MACD crossed under, very similar to DIA. Next up is QQQ. This is your technology sector. Again, broadening, falling formation, weak coming in, lost the 200 SMA last week or 2 weeks ago, and back tested the 2018 the 2018 anchored VWAP low both weeks, and very, very weak on technology. So I think a break below the last 2 weeks lows, we should see that 618. And notice how, the COVID low to the all-time high, we're already coming into that 618 at 258. We're just about 11 points shy. We're much closer on tech than we were on the Dow Jones and the S&P. So this should tell you that the Qs are relatively weaker than the rest of the market. And I think, the names that we're going to look at in just a bit will show you that that is truly the case. So again, RSI under 50, weak but not oversold. MACD crossed under, no squeezes to note. 258.21 is going to be the level to watch this week. As I mentioned, that's our 618. We lose that, 251, 229, and the 2015 swing low anchored VWAP would be my next targets. All right, sectors almost done here. We've got the IWM. Here are your small caps. Potential for a double bottom here. So 164.61, that's the level to watch this week. And, to the upside, if we ever get back to it, 188, that's definitely the level to watch. You could see support turned, resistance. And here we have the 2016 anchored VWAP low. We have yet to test it since post-COVID here back in 2020. So I would be watching that level right around 162 to 164. We lose that. The 618 should come at 152.47. You could see A lot of supply up here, not that much down here. So watch out on small caps if we do lose these levels. All right, that's it for the big sectors or the big indices. Let's take a look at some individual sectors. I'm only going to highlight two this week that I think look fairly interesting. The first being BJK. This is your gaming ETF. Here are some of your top holdings. You could see we had a pretty decent week last week after putting in an inverted hammer at the 618 at 34.29, and we did break and close above that level. Still struggling here at the 30 SMA. That's going to be your orange line here. We get above that, and we have this falling wedge to contend with. And then I think 38.70 would be the level to watch. You could see resistance here and here. I think we get over that, and I think you can start to see some constructive moves up to these supply zones up above. We do have a squeeze that's been setting up. It's for about 7-8 weeks here. And the other thing I noticed, some bullish divergence. So RSI making a higher high with price making a lower low, or higher low, I should say, on RSI and a lower low on price. So again, thought that was very interesting. Doesn't necessarily mean we're going to reverse this coming week, but certainly something to keep an eye on. All right, the other sector that I want to keep on watch, no surprises here, energy, ticker XLE. This is your energy sector ETF. 2 weeks green here, struggling with 83.20. That's going to be the level to watch this week. You could see 3 weeks here into that level and failed. Again, last week into that level and failed. We did close above our 30-week simple moving average. RSI is starting to break out. MACD is starting to curl. So watch for energy to potentially make a move over the next couple of weeks, targeting 93.31 to the upside. All right, last thing I'm going to take a look at sector-wise is the dollar index. Again, this is a weekly chart. You can see we came into resistance here back in 2017. Again, during that COVID low back in 2020, and now we're absolutely smashing that level here, that 102.474 level, and it's just been a monster move. And so as the dollar continues to increase, the market is going to continue to get crushed. Now, something to notice, RSI with a 14-period level, back in 2015 when we started to come into these highs, we came into 82.59 on RSI. We're starting to come up into those levels again. That doesn't necessarily mean the dollar is going to stop moving higher, but I think at some point soon we should start to see a little bit of a reversal off of these highs. The dollar cannot sustain these types of levels for a long period of time. So I would at least expect a little bit of a pullback, and then if we do pull back and RSI cools off, then maybe we get our next run higher. So that's what I'm looking at here on the dollar index. So that's it for the indices and the sectors. Now I'm going to go into some tech charts. The first one we're going to take a look at is Apple. And again, we're going to be working on the weekly time frame. And so, yeah, Apple inverted hammer into the 618 retrace at 147.22. We lost our 2-year trend line from that low to that low. We're now 2 weeks under that level. So if Apple continues to be weak, 133, 129, 118, 100 are going to be my levels to the downside. Next up is AMD. Semiconductors, pretty weak for the last 4 weeks. Once we lost that 618 at 72.91, a short alert went out. This has been a really, really good short for 3 weeks now. And looking for a potential bounce here around $50. We've got a 1618 extension at 51.61 to the downside. That's also a demand zone that we're sitting in. And we've got a 786 retrace at 47.94. You also see that we had a TTM squeeze fire to the downside right before that breakdown. That was a really good signal. RSI weak against 50. MACD crossed under. Yeah, this is what it's looking like. Potential bounce right there at 50. Next up is Amazon. Short alert went out under 122. Was pretty good for 2 weeks. Then we had a nice rebound last week, but then got rejected again at that 618 at 122.17. So that was another good area to take another short off of. We're weak coming down, closing to the bottom of our range. This is looking more like 100 to 104 should come maybe in the next 2 to 3 weeks if the market continues to be weak. RSI again weak against 50, MACD crossing under here. Next up is CrowdStrike. This is, one name that's actually shown some decent relative strength to the market. We're back above the COVID low anchored VWAP, but we're still below the 30-week moving average. I think this is fairly good relative strength. Doesn't look like a good short to me unless we get under 133.80. Maybe you could short it under 165 to 133. Decent 32-point move there. But we do have a squeeze setting up, and it looks like momentum went positive, and now it's starting to go negative. So watch this, this level here that we're watching, this 165 again. We fail there, potential to move down to 133. We fail at 133.80. I think this definitely moves much lower, probably to 100. Next up is Datadog. So, trading into a bit of a large range here, 83.50 to 114.13. I think this is a really good short under 83.50, targeting 73.02 to the downside. Relatively neutral TTM squeeze here. Again, weak against 50 on RSI. MACD really flat, not doing that much. So keep an eye on Datadog. Next up is Google. So Google lost its 50% retrace at 101.07. It also lost its psychological support at 100. We closed at 98.68. We're under the COVID low anchored VWAP. For me, the next target to the downside is going to be $89. That's going to be your 618 retrace from your COVID low to your all-time highs. You also have a 2-dot, basically a 2-week squeeze that's already fired. We're weak against 50 on RSI. We're not quite oversold. MACD is crossed under. Here's Meta. This has been another really good short for us. We shorted it under 155. You could see the acceleration on that price move. That's why, listen, you could short a lot of these names intraday. You could even take, short-term shorts on these for a short swing. But for me as a trader, I'm not looking for, the little bits and pieces. I'm looking for the meat of the trade. And for me, the meat of the trade was under 155, and you could see the price acceleration that we got. We even dropped below those COVID low from March 2020, those COVID low lows. And 133, I think 123 comes next. That's going to be a very interesting level. You've got a 200% extension there. We're watching, and it's still showing a little bit of divergence, but that divergence is starting to break down. So there might be a lot more weakness left in Meta. We break down below 123, and I think very possible for 100 to come. The only problem with this short at this point is we're starting to get into oversold territory. And, although you can remain oversold for a little period of time, right? Oversold here for maybe 4 to 6 weeks. You got that bounce, and that was a really good opportunity to reshort that. So just keep that in mind. I think there's one name out there for me that's going to be a really good short for this week, and we'll talk about that in a bit. But Meta, I think, a lot more risk to the downside now that we've been pretty weak. All right, next up is Microsoft. So this one, we had, again, that long-term trend line breakdown. That was back about a month ago. And, another 2 weeks down. The last week, we tried to bounce back up. We hit that psychological wall at 250, got rejected, inverted hammer. I think this one, potential to come down to 216. You got a pretty big demand zone from that swing low to the swing high. We also have a TTM squeeze that did fire to the downside 3 weeks now. Still room on RSI to move to the downside. MACD is crossed under and looking negative here. Next up is going to be NVIDIA. Again, semiconductors, relatively weak, similar to AMD. This is a pretty good short at 140.92 on that bearish engulfing candle. I had another 2 to 3 week short. We came into the prior level of support right here and here. That's where we pretty much closed right around 120.76. So need to see NVIDIA defend this level or under 109.80. I think we could see 100 and potentially 79 in time. 4 weeks TTM squeeze fired. We're starting to enter oversold territory, so you got to be careful shorting when we're oversold. It's not to say that we can't continue to go down, but you will at times get oversold bounces in these levels. Here's Shopify, really tricky trade to the downside. Short alert went out under 29.68. I wound up stopping out of that short last week because we came into it. Wound up being not the greatest of ideas, because we actually came right back down and closed right on top of our first target at 26.95. Under 26.95, I think it's a pretty good short down to 21.19. Although we are showing divergence on RSI, bullish divergence on RSI and MACD. We have a TTM squeeze that has still been setting up, but no clear direction on which way it wants to go. We have yet to backtest that declining 30-week simple moving average. Just two more names to go. We have Snowflake. This is probably one of my top names from a relative strength standpoint. A couple of ways you could look at this. Potential inverted head and shoulders, or you could look at it as a cup and handle. Either way, I think is appropriate. You have rising momentum on a TTM squeeze setup. We're hovering right around 50 on RSI. MACD has crossed over and still rising with positive momentum. For me, 167.10, that's the line in the sand. We go under that, I think it's a good short. We hold over it, and I think a move to 200 is likely, in the coming weeks. Anything over 200 for me is fairly bullish. And last but not least, Tesla. So yeah, Tesla for a little while was showing some nice relative strength to the market, but the last 3 weeks, very ugly, and last week, really ugly. So no surprises where we started to bounce, or where we stopped, I should say, because this honestly has not bounced yet. But 219, 218.99, basically, that's the level I'm going to be watching. You could see a lot of support or potential support here and resistance back here. So yeah, it's looking like it might come down a lot more. RSI just broke down. MACD just crossed under. We don't have any squeezes, but if we lose this, demand zone here, then the next demand zone below isn't until about 150. So you're going to have some levels below it, but I think under 219, I think you could short this to 200, and then under 200, you could potentially get this down to about 172.85. You also have that swing low anchored VWAP from the COVID lows here. So this would be the area I would watch, though, because you could see on the broadening formation here, when you continue that line down, it comes right here, which is right where our COVID low anchored VWAP is and right where that 618 retracement is. So 219, line in the sand for me this coming week. So that is it for my weekend review. I did the top sectors, the top ETFs, the indices, my top tech charts. I will have another video out shortly. That's going to be for my paid members group. And that one, I basically will be going over my top 11 30-minute day trading levels. I'll go over some swing trade ideas for next week. I think I have 9 relative strength charts that I'm going to be going over. And then I have one really good short idea that I think could be a tremendous short next week. Again, that's only going to be exclusive to my paying members. I have a few plans. I have a 129 for 3 months. That's relatively inexpensive. Then I have 479 for the year. That includes everything that you get in the 129 quarterly, but it also gets you lifetime access to my Fibonacci course and a 1-hour intro call. Then I have the 699. That's the same as 499, but you get 3 one-on-one Zoom calls. And then I only have 2 left of these. This is my lifetime plan. This one's going up to $14.99 in, I was going to say in a couple of weeks, but as soon as these 2 seats sell out, the price will go up. Don't be the person that wants to jump on that train and misses it and then has to pay more later, because every time I go up in price on my lifetime, I only allow 5 seats. Once those 5 seats sell out, the price will go up. So thank you so much for spending 19 minutes of your time with me. Hopefully you watched it at 1.2 or 1.5 speed. Then you probably got through this in about 15 to 17 minutes. But yeah, hopefully, this coming week will give us a little more clarity. Obviously, this past week looked pretty ugly. I think this week coming up. Unfortunately, I think it might be pretty ugly as well. So my first inclination is to look at trades to the downside, but I'm always looking for relative strength in the market. And like I mentioned, there's at least 9 charts that are showing relative strength that are bucking the trend. And that's where my eyes are going to be, and along with that one potential short idea. So enjoy the rest of your day. Good luck in the market next week, and I hope to see you there.